We're in the middle of a long week of voting. This is now ending in a long evening of voting dealing with tax reform. This particular night, there'll be multiple different amendments that'll go on, and then hopefully in final passage by late in the night tonight. This is the culmination of a process that's taken the entire year literally to do many hearings. It started early in January, and so literally we're watching 12 months of work now on tax reform. Lots of amendments through 3 different committees, even in the past couple of weeks in the Senate. The House has already passed one bill on tax reform. The Senate will now pass a bill that's slightly different. It'll go to what's called a conference committee over the next 2 weeks. There'll be additional edits and changes there. There'll be opportunities to be able to rescore the bill and to be able to look at how it works all together. And House members and senators will meet together to be able to work out all the differences between the 2 bills. Then they'll come back to the House and then to the Senate for final passage, and then off to the President, probably right before Christmas, as the current calendar is moving right now. The bill as it's moving through the Senate right now reduces taxes on all individual rates. It doubles the child tax credit. It doubles the amount of standard deduction. And some people have said, what does that matter? Well, what it would mean for a family is the first $24,000 of income for every family is tax-free. It also allows the opportunity for not only individual tax rates to go down, but also small business tax rates to go down because they're often tied to the individual rates. There's also a lot of parity between corporate rates and individual family rates that are also run their family business, which is one of the big issues. How can you help family businesses compete with a corporate business when the tax rates are so different? This tries to bring both of them down to being very, very similar. It does also bring down corporate rates, and that's exceptionally important. We have one of the highest corporate rates in the world. Been a lot of questions about debt and deficit, rightfully so. All Americans are very concerned about the amount of deficit that is overspending that's being done by the federal government. In fact, I just put out a report recently showing ways that we can reduce our spending to get us back to balance. The tax policy also fits into that as well. When you reduce taxes, everyone wants to know the question, how much do you reduce them that we don't actually go into deficit spending as well? It's a fair question. When you reduce taxes, there's no question there's more economic activity. In fact, the Joint Committee on Taxation, which works for both parties in the House and the Senate, is a nonpartisan group. They say if we have just 0.2% more economic activity, that's not 2%, it's 0.2% more economic activity, then this will be a break-even bill. That's a good sign for us, actually. Been a lot of rumors about the Affordable Care Act and how that fits in the tax policy and why it's even there. We do take away the individual mandate from the Affordable Care Act in this bill because the individual mandate is tax policy. It adds a tax penalty to individuals that aren't on a particular type of insurance that Washington, D.C. approves of. The subsidies don't go away. All of the subsidies for all the healthcare choices are all still there. None of those are affected. But 80% of the people that pay the fines in Oklahoma make $50,000 or less. Those are individuals that can't afford the new healthcare insurance and they can't afford to pay these fines, but they have to pay them anyway. We take those fines out. That is a great tax relief to people that make $50,000 or less, in addition to the other tax pieces that we're trying to accomplish. There's also been a lot of conversation about teachers and teachers losing their ability to be able to write off their school supplies. Actually, the Senate bill is the opposite. The Senate bill has twice as large of an offset for teachers, where they can have up to $500 of school supplies that they can write off on their own personal taxes. There are a lot of things that I encourage people to actually get the facts about as they walk through this process. No one that's in the House or the Senate of either party wants to see America hurt. We want to see our economy growing again. We've grown at less than 2% now for a decade. That's the first time we've had a decade like that since World War II. Our typical economy grows over 3%. What does that mean when it grows 3%? More jobs, more people are actually able to make more money, more people are actually able to buy more stuff and save more for their own family. We'd like to be able to see us get back to a typical American growing economy again. One of the ways that we're trying to do it is by getting the right tax policy. It's clear our tax policy is wrong because our economy continues to slow down, which is not typical for us as America. We've got to make a change to our tax policy to try to get us back on track again.